Hello traders and welcome to another video review. Today is Thursday, July 25th, 2024. Let's find out what's going on the economic calendar today. For today I have only the most important events, and they are rather important because, as you can see, there's a few of them, and all of them take place at the during the New York session, US session. USD initial jobless claims from the USA are scheduled for release at 2:30. The market participants expect a decrease from 243,000 to 237,000. Core durable goods orders are scheduled for release at 2:30 as well, and goods orders are expecting to increase from minus 0.1% to 0.2%, and the USA GDP scheduled for release at the same time, 2:30, is expected to increase from 1.4% to 2%. So all day today, all Thursday, is all about the USA. So let's go and find out what's going on the charts, and we are going to first. Euro dollar for our chart is showing us the deterioration of the US dollar towards the level of 1.0826, just as expected. So right now we broke below this technical support, which is of course something that we did actually thought about, and our scenario got this earlier. Now these two levels here, 1.0847 and 1.0853, will now act as the technical resistance for the price, and the situation here is very simple. The market is trading below 50, below 100 periods moving average. Momentum is negative. It's close to the level of 30 again. So the outlook here for the euro dollar is bearish. The next target for the bears is located at 1.0806 and then 1.0789. So this is the next target for bears, and it looks like the market might be willing to test it, especially because there is a room here on the RSI. But if we apply the Fibonacci retracement tool, you can clearly see, let me just apply it. So this is the low, and let's say this is the high. So you can clearly see that right now we are approaching the level of 50%. So it's just above the 1.0806. So basically this level here will be even stronger as a support, because there is a 50% Fibonacci retracement there as well. So please get this into the account. So that's the level the blue arrow is pointing at. So that's the situation on the euro dollar. Correction continues. We are still moving lower, so there is no doubt about it whatsoever. Let's find out what is the US dollar to Japanese yen doing, and as you can see, it's coming down and down and down. So as the Japanese yen is finally strengthening, and if we zoom out, you can see that this movement here is a serious movement. This is a serious movement to the downside. First, let me find the technical support. This is the post Bank of Japan intervention support, 151.87. So this is the big green support zone, big level. This level now, 153.39, is technical resistance, and this level here is now the technical resistance, 154.56, and one more level here. All of these lows are now technical resistances, 153.61. Please notice that we deteriorated already. Let me just take my tool, the price range tool, from the highs to the recent low. We deteriorate 6%. So that's a very impulsive movement to the downside, very sharp reversal, and this is how it looks like on the on the 4-hour chart. If we switch to daily, you can see that the pattern is you know, it's clear as the sun, right? If we switch to weekly, you can see that on the weekly time frame chart, this movement here started with this big harami pattern confirmation and now extension to the downside. However, if we talk about the trend, the long-term trend, like 3-4 years back, is still up, and this movement to the downside is not the biggest correction during this uptrend, because the last big correction from 2020 to the end of the 2022 was 16%. All right, so this 6% correction is not even half of this correction, right? So we can still say that the uptrend is intact. However, the correction was needed for some reason. Now, on a daily time frame chart, you can clearly see we hit the extremely oversold market conditions. So this support 151.87 is a big support. Again, it's another clue that the market gives us to treat this support seriously, because we might see some sort of the bounce from this level. So last time we went towards the extremely overbought conditions, we went down, then we went towards the extremely overbought conditions again, we went down, and this time the history might repeat. So please prepare yourself for possible rebound from this technical support. We will see how strong the rebound will be. This is the key level as well. So that's the situation on the US dollar, the Japanese yen. Let's find out what the US dollar index is doing. It's all about the US dollar today. So US dollar index on a 4-hour chart is trading again between 50 and 100 periods moving average after some kind of a small bounce from the 103.62 level, and right now it doesn't actually looks like there is a buying frenzy on the US dollar index. Is a range bounded market, roughly with limited volatility, as you can see. Technical support 103.62, and right now we are waiting for the market to develop some kind of a directional movement. You can see this movement here to the downside. So let's see how much did we actually retrace from this last swing down. And if we apply our Fibonacci tool, you can see that we retrace exactly 38%. 38% has been retraced of this last swing down. So this is a very good level for reversal lower. However, any breakout higher would open this level here, 104.77 for a test, or 100 periods moving average, 104.77 for a test, and then 50% Fibonacci retracement, 104.87 for a test. Okay, so very nice zone here for the bears to push the prices lower if the bulls get there. All right, so that's the US dollar index, and of course we need to talk about the S&P 500. Why? Because we deteriorate even more towards the extremely oversold conditions. So the recent movement to the downside was actually, let me just take my price range, the price range tool was actually 4.44%. so it's a kind of a significant movement to the downside, and it's kind of a big one. So please notice the fact, but it's still lower. Again, it's still less than, let me just take a look at this one, it's still less than 6% April correction, right? So no big deal for now. As long as we are above the 6%, this might be treated as a some kind of a pullback after all-time high was made. So that's a very important situation. The other situation I would like to talk about, let me just show you guys something that you possibly see right now already, but let me just reiterate this. We got the wave A to the downside, we got the wave B, counter trend corrective wave C to the downside. That's it, into the extremely oversold conditions. Perfect zigzag for me that might end up very soon, and then the market should reverse to the upside. And last but not least, the Bitcoin. Bitcoin is doing exactly what we've been expecting. We got the lows of the wave A located somewhere around 65,453. Very short wave B. Let me just grab it. There you go. 67,148, and the wave C to the downside towards the lows of the previous wave 4 at 63,233 is now being developed. As you can see, perfect situation after the bearish divergence was made between the wave 3 and 5. Typical behavior of the of this kind of a market. So this is of course the wave A, B, and C. Looks like a simple correction to me so far. Target is the loss of the wave 4, 63,233. Then this market should enter the extremely oversold conditions on the 4-hour chart, and the bounce and rebound is expected. So a little bit less to the downside and the rebound. That's the outlook for the Bitcoin. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.